All right, guys. If you are worried about the gold price right now, how it just took a dive on Thursday, kind of up right now. But if you're worried about the gold price, let me give you some assurance today on this episode of the Black Bullion Show. It is Friday, May 1st, 2020. Let's get into it. The ISM manufacturing data just came out today, and obviously is performing a little bit better than was expected. It was expected to drop to 36.7% in April, but instead it dropped to 41.5% in April. March's reading was 49.1%. Now, generally, we've had the lowest reading since the 2009 financial crisis. Um, and readings above 50% in with this index show signs of economic growth. Um, Below 50%, obviously, it's the opposite. And the further you're away from 50%, the greater or smaller the rate of change. Now, even though we didn't hit that expectation of 36.7%, we should realize that we still have more room to drop. And I'm going to get right into it from a mainstream source, which is pretty insane, a very big pumper of the Dow. Before I get into that, please like the video. Please subscribe if you are new. When you like the video, it helps to get this economic evangelism out there. So let's get into this mainstream Dow pumper here. And it is, well, it's not Warren Buffett. Let me just get rid of that. Um, it is Jim Cramer. Jim Cramer says his most trusted indicator makes him concerned about the market's trajectory. This was released yesterday on April 30th, the last day of April. This is what he said on Mad Money. Stocks on Wall Street have reached levels that are too hot for Jim Cramer's liking. After the market completed its best month of trading in more than 3 decades, the host of CNBC's Mad Money said he is worried about its near-term trajectory. We're now at plus 7.2% on the S&P short-range oscillator. That's the one I swear by, meaning that's his metric that he swears by. This is the one that called the bottom when it fell to the minus 20s in March. He explained, anything above plus 5 is overbought. A 7.2 reading makes me concerned, and he is likely concerned of a future sell-off. Now, funny enough, I woke up this morning to check, to check how everything was doing in the markets, and S&P is a little bit lower than what it was yesterday. Uh, Actually, it's a lot lower. Well, it was yesterday on April 30th. Before at 3:45, it was at 2,904, and then this morning it hit 2,853, and now it's at 2,842. So it's been dropping. So his short-term or short-range oscillator might be something to take a look at. I actually did take a look at the website. It's actually a product from a company. It's like $500 a year, so I probably won't be getting that. If you guys have it, let me know if you guys use it. But moving along, Kitco, on the other hand, did a survey. It's their weekly gold survey. They survey Wall Street and Main Street to see what their view is on gold. And as you can see, Wall Street and Main Street are both bullish on gold right now. The bears are starting to catch up a little bit to the bulls in Wall Street, but generally we have pretty good sentiment for gold, the gold price moving upward next week. Now, in the long term, again, I want you guys to take a look at our handy dandy Gallup poll here. because I think it still bears repeating that once we get to, we haven't hit our highs yet. And we'll know we've hit our highs yet for gold. We'll know we'll hit our highs, at least from Main Street, once they believe that the best long term investment is gold. And we have historical evidence to show that they have believed that in the past, and that number changes from different asset classes. So in 2011, when the gold price was high and everything was just burning around us, or was previously burning, gold was the number one asset chosen by everybody. And then slowly it went down. Now, out of all of the investors, it's one out of six, as far as where it is in the standing. But it was at first place in 2011. It was at first place in 2012, and then it was in second place in 2013. So it had 2 years of it being in first place. So once we hit that high, we will have much higher sentiment for gold from the public. We don't have that right now. But the fact that we have surveys such as this from Kitco makes me confident that we have a lot more room to go as far as the gold price is concerned. So don't worry too much about any minor pullbacks that you saw on the last day of April or anything that's happening right now. We have a lot more upward trajectory to go. All right, guys, let me know what you guys think in the comments section below. Thanks again for watching the Black Bullion Show. Please give it a like. Please subscribe if you're new. Have a good one.